$7.7 billion. That's the staggering investment commitment just approved for 33 projects in Quang Tri, Vietnam, as of today, July 4th, 2026. What does this massive capital influx in a developing region reveal about global opportunity, especially when pitted against narratives of easy paths to the American dream? As we witness this surge in foreign investment, it's worth noting that the United States has been experiencing a significant rise in birth tourism, with over 18,000 births to foreign nationals in 2025 alone. According to a report by the Center for Immigration Studies, the total number of births to foreign nationals in the U.S. has more than doubled since 2016, with many of these mothers traveling from countries such as China, India, and Nigeria. Here's the thing. While some are focused on what many see as questionable shortcuts to opportunity, like the controversial practice of birth tourism, massive, tangible investment is happening elsewhere. We're talking about real capital, real projects, and real jobs. This $7.7 billion isn't just a number. It represents a strategic move by investors into a region ripe for development, signaling a shift in where genuine wealth is being built. But it also highlights a growing tension between those who build value through hard work and significant investment and those who exploit loopholes. For many who've genuinely built their American dream brick by brick, this contrast can feel like a direct challenge to their efforts and sacrifices. It's about legitimate opportunity versus perceived exploitation, and the money flowing into Quang Tri offers a stark counterpoint. The data backs this up directly from the source. Dantri reported today, July 4th, 2026, that Quang Tri province has approved 33 projects totaling nearly 195,000 billion Vietnamese dong, which translates to over $7.7 billion dues in committed capital. This isn't speculative, it's a concrete commitment for research and investment. Think about that. 33 distinct projects, from infrastructure to manufacturing, poised to transform an entire region. This kind of capital deployment creates immense ripple effects. Demand for materials, skilled labor, logistics, and supporting services. It's a goldmine for savvy entrepreneurs looking to either service these massive projects or build parallel businesses that cater to the new economy emerging around them. While others debate the ethics of birth tourism, real money is moving, and real opportunities are being forged for those paying attention. Here's what nobody mentions when these hot-button social issues dominate headlines. While public discourse is consumed by debates like birth tourism, the smart money is quietly identifying and exploiting massive, legitimate growth markets. The truth is, building true wealth often means looking beyond the noise to where capital is actively being deployed to create value. That $7.7 billion in Quang Tri isn't just a headline. It's a beacon for where the next wave of economic expansion is happening. Whoever spotted this trend early, identifying regions primed for investment, is already positioning themselves for significant gains. This isn't about shortcuts, it's about strategic vision. So what's your concrete next step today? Research emerging markets that are attracting significant foreign direct investment. Use tools like the World Bank's FDI data or Bloomberg terminals to identify regions similar to Quang Tri. Then, brainstorm services or products. Think Shopify stores for local artisans, Amazon FBA for new local products, or freelancing opportunities for businesses needing support that can either serve these burgeoning economies directly or capitalize on the demand generated by this kind of large-scale development. The opportunity is real, but you have to actively seek it out. Hit that subscribe button for more actionable insights. Top-tier analysts are zeroing in on this region, not just for the headline $7.7 billion figure, but for the strategic implications. Bloomberg recently highlighted an uptick in sentiment reports from fund managers specializing in emerging Asian markets, specifically mentioning Vietnam. They're tracking a shift of capital from more saturated tech hubs towards areas with significant infrastructure upside. What's driving this isn't just raw capital, it's the long-term vision for supply chain diversification and new consumer markets. Early-stage venture capitalists, particularly those with a focus on logistics tech and renewable energy, are actively scouting. They're positioning themselves to fund local startups that can plug directly into these massive new projects, anticipating substantial returns as the region industrializes. This is what most investors missed: the granular opportunities within the macro trend.
It don't matter, 'cause all that matters is making cash. Matters hatters, but you gotta stats. All that matters is making cash. Welding tight to saw, you can make a splash. All that matters is making cash. All that matters is making.
To grasp the magnitude, think about Shenzhen in the late 1980s. That was a sleepy fishing village before it became a special economic zone, attracting immense foreign capital that transformed it into a global manufacturing and tech powerhouse. Or consider Ireland's Celtic Tiger era, fueled by foreign direct investment in tech and pharma. In both cases, early movers who invested in ancillary services, real estate, skilled labor training, logistics, saw astronomical gains. Whoever spotted those underlying trends early didn't just invest in the big factories, they built the support ecosystem around them. The patterns are eerily similar: a strategic location, government incentives, and a ready workforce. History teaches us that the real wealth is often built on the second-order effects of such large-scale capital injections. You'd expect the big corporations to be the sole winners, right? Not entirely. While major firms certainly benefit, the unexpected winners are often local small to medium enterprises, SMEs. We're seeing a surge in demand for local construction suppliers, specialized equipment rentals, and even catering services for the influx of new workers. On the flip side, some traditional local businesses, slow to adapt, could face increased competition or struggle to meet new operational standards. However, the biggest opportunity lies with individuals who can bridge the gap: interpreters, cross-cultural communication consultants, and local fixers who navigate regulations. They're becoming invaluable, charging premium rates for their specialized knowledge. It's a dynamic shift, creating new wealth streams for agile micro-entrepreneurs.